Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you, buddy?
Hey man, doing great.
We're bringing you this podcast, guys, to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to all of our pages, Spotify, YouTube, Facebook, wherever you listen or watch your podcast. We could not do this show without all of our show sponsors: Corland Financial, CrestCore Property Management, Triumph Construction, Local Title, and Griffin Clift, Everton, and Mashmeyer. Those are great partners of ours. I use them in our daily business. I mean, we both do.
Yeah.
I help buyers and sellers every day, guys. If you are looking to buy or sell anything in Memphis, Dean at CrestCore.com. I'll be happy to help you with that. Last week, we brought up, I'm going to start answering some questions.
Yeah.
All right. This social media is an animal now, I will say that. So it's a wild, woolly beast. But we do have some good questions on there. So you guys keep posting those. Even the funny ones are good. We're going to hit one of those today, too. So one of the questions that we had was talking about siding. Can you elaborate on siding? You know, because I think last week or 2 weeks ago, I said I'm really picky on a house that has siding. And the question was, can you elaborate on siding? What is good? What is bad? What's a red flag? And the simple answer to that is that it's all terrible. It's all bad. None of it's any good. I wouldn't, if you can avoid it, great. Now I will say this, like, you know, I'm trying to be kind of funny with it a little bit, but I'm not.
No,
but in
siding,
some areas, in some markets, siding is what is their main kind of material that they use. Like I know up north, siding is a little different. It's way more common. Here, it's not. Yeah. I don't want you to buy houses with siding here. It's constant maintenance. Brick.
Well, I was going to say what you want them to buy instead.
Brick. I mean, we have too many brick options, so all the siding is bad.
And it's bad because it gets dirty, gets algae, it breaks. Brick is way more durable. Which is what you want.
Almost maintenance free.
Almost maintenance free.
Yeah, literally.
That's right.
All right. Question 2 came from YouTube. Complimenting on the podcast, which we always appreciate that. Crime rate, talking about that, and then I know MSA is increasing, but houses like you guys like are in the city. What's your answer to that? My struggle is with continue to invest there since it's a supply and demand function, or is it a serious risk of people moving? I think. This listener is probably overthinking this a little bit. There is no shortage of, and I'm here every day right in the middle of this, no shortage of tenants and no shortage of investment deals to buy. We're closing 27 houses this month. We're going to go over that in today's podcast with our market update. But I'm not seeing a vast majority of tenants or people just completely, bounce out of the city. Some people are due to natural graduation.
Life happens.
You have kids, you want to get out in a different area or whatever it may be. We're not seeing any of that here in Memphis where there's just a fly risk out of the city. I mean, all of my houses for the most part are within the loop. Yeah. Almost all of them. There's a few that are outside of that. I have 2 vacant. Yeah. That's pretty good.
Yeah. And we'll talk about that on market update, same with vacancies. But I would think to your comments and your points is like, there's no shortage of renters and no shortage of houses. Yeah. Rents are only going up.
Yep. And
home prices have only gone up.
Yeah.
And we've been doing this since the early 2000s, 25 years now. Yep. And the number of parcels in the county that are residential has pretty much stayed the same.
Right.
You know what I mean?
So what does that
and the population too. So it's like some come on, you get some new builds, and then you get some that are taken out of the inventory. So people forget that. Yeah. And not to mention, and there's a distinguishing factor that you can do. It's kind of like that story about like, hey, we're getting chased by a bear, you and me, and I stop and go, I'm gonna lace up my sneakers.
Yeah.
Hey, I'm gonna lace up my sneakers. And you're like, why are you lacing up your sneakers? You can't outrun the bear. And I'm like, well, I don't have to outrun the bear, Dean. I only got to outrun you.
Yeah.
And that's what I'm saying with these houses too. Don't forget, if you do a good job as a landlord and you keep up with the maintenance and you keep up with keeping it a nice house for a tenant, you're going to be better than a lot of other landlords that are out there who are skimping.
I would encourage them to talk to some investors that are doing a really good job of, keep maintaining their homes and maintaining their tenants. I'm just not seeing that.
That's right. It's a great question.
I'm just not seeing it yet.
Yeah, I like it.
Last one is kind of funny comment, but someone asked what my favorite sneaker is. I got you, man. It's the 1990 Air Jordan. 5, the black one with the logo. It's a clear sole on the bottom, and he's got the Jordan logo on the bottom. I begged and begged and begged and begged parents and Christmases and whatever we could. Finally, I got them. Those are my favorite pair. I have a pair at home that are unworn. I can't. They're not my size, but
that's
I keep
good.
them. Yeah,
that's good.
It's me. You got one?
I was an OG. I mean, I'm a kid of the 70s, 80s, right? So I was an OG Jordan.
Okay.
Like had the 1s, had the 2s, had 3. Yeah. But I'm not a Jordan guy now. I'm more of like a running shoe guy, like a Brooks running shoe.
There you go.
So just pretty simple. But I did order some a pair of Vans.
Oh,
just the other day, and I haven't, and it's not the checkerboard, but I haven't had the checkerboard Vans since the early '80s. So like
checkerboard
Jeff Spicoli days, man.
There you go.
So anyway,
we went from Air Jordans to Jeff Spicoli. So there we go. All right, let's get into today's podcast. We're going to do a market update. This one will be fairly quick, but I wanted to give people an idea just of where we stand today. We are going to be doing our zip code breakdown in August. That's coming up here in about a month. So we're excited to get that information out to you. But today, I just want to give you a quick market update, what we're doing. Last month, the CrestCore brokerage closed 21 properties, 21 sides. This month, we're set for 27, which to me is telling me that there is still activity in our market. And this is, by the way, when I give you these numbers, this isn't like of 27 this month. Like I don't have one investor buying 24 of them.
Right.
I think the most.
Because I was going to say that doesn't even count. And I don't know if it's this month or next month, the big deal you're working on.
Next month, we've got a huge package of almost 49 closing. So, yeah.
But that's one buyer.
That's right. Yeah. That's one buyer. This is not 27 closings. I think we have 1 or 2 that are buying 2. The rest of these are one-offs. So,
great.
I don't want you to get confused on what that actually looks like. A lot of investors, a lot of activity. What is selling? You know, my thoughts on what is selling are just it's an $80,000 product to probably $150 to $175 maybe. And believe it or not, this is a fun fact. Of the 27, 21 of these are loans.
Okay.
So
okay,
the rates are not 9 anymore.
No,
they're not 3 anymore either.
Right.
So I mean, you're getting
people are borrowing money to buy houses.
Well, yeah, I mean like 80%,
and sellers are okay with
accepting them.
Yeah,
we're seeing conventional loans. I've got a mixture. It's conventional DSCR loans and hard money. I've got several core lend financial guys that are borrowing right now and buying. So there's several different loans that are working right now. So remember buyers and sellers, investors anyway. The real estate market comes in and out, meaning there's going to be ways that you can buy now and ways that you can buy later. And it's going to continue to shift. I think that's one thing that's important, that if you take out of any of this market update today, is that the way that you bought 1 year ago is not how you're going to be buying right now. And how you're buying right now is not, you're not going to be buying the same way in a year from now. It's just things are going to be a little bit different. You use cash for 2 years. Now people are using a loan. And because we work on, you and I talk about this every month, we're worried about our numbers every month, right? It's a grind. If you've been in sales, if you're listening and you've been in sales for any amount of time and you've had any amount of success with it, you'd realize that you're a hero on the 30th and the 31st of the month. And you're a complete, jackass on the first.
Start over.
I mean, I've never seen a bigger night and day difference in life. And I don't care if you've been in it 20 years or 2 years or 2 months. Yeah. You're an idiot on the first and you're a hero on the 31st. It's just the way that it goes. So there are different ways to buy now than there were a year and a half ago or a year ago. So acknowledging that, accepting that, and kind of, using that as a strategy to me is what I would take out of this today. So that's the product, 80 to 150. Are you seeing anything else from a product
No, I think
standpoint?
that's good. I was going to comment before that as well on the inventory buyer market, seller market.
That's a great question.
Yeah.
Man, I'm feeling, okay, so we talk about our pendulum swinging.
Yeah. Oh, yeah.
Okay. And like 2 or 3 years ago, it was all buyers all the time.
Oh, man.
Like
it was,
the needle.
It was stuck. I remember that. Yes.
That needle just. So over the last couple of years, and I'm sure Alec, our producer, will get a little bit better description than this pen, but over the last couple of years, we've begun to swing down. And I remember about a year ago, we were kind of teetering in this middle where it's like, hey, where are we at? I actually think we've ticked up a little bit on our buyer side.
Right.
I think our buyers have got a little bit of an advantage right now, not a lot. Because what I mean by that are there are still sellers that are holding firm and getting their prices, right? Yeah. So that I don't want to make it seem like this whole thing is switched, but I do in that pendulum swing, I believe like we are teetering towards our buyer market. I'm seeing buyers get closing costs and get some concessions. I'm seeing some of it, right? Yeah. We locked one up this morning where the guy asked for $5,000 in closing costs and the seller gave it to him.
Okay. Yeah.
On an investment deal.
Yeah.
I don't ever hear stuff like that.
Yeah.
Warranties and closing costs and other thing like that on investment deals. It's not normal in a popping cash environment. None of those smaller things are ever talked about because you don't have to.
You don't have to.
Now sellers are looking at it a little bit better. Like, hey, if I want to get my number or I want to get my timeline, what can I give up to do it?
Yeah.
So
that's good.
I'm noticing a little bit of that. That's a great question.
Yeah. No, because I mean, like 10 plus years ago, it was a buyer market, right? And then to your point, through COVID, it got to be a seller's market, and it has kind of come back.
I believe it's coming back towards our buyers.
A little bit middle towards the buyers. And what I was going to say on that with inventory, I went back and kind of looked at the Memphis Area Association of Realtor inventory. And everybody's heard like there's more inventory on the market now than there was since COVID.
Yeah. 9% interest rate will do that.
But you got to remember, and we're at 3,600 at the end of the month. Houses for sale. It has been. It was in 2019. It's still less inventory on the market than there was in 2019. So it's the most we've had in 5 years.
Yeah, but it's still less.
It's still less from 2007. Mine starts at 2007. So from 2007 to 2019 for 12 years, it's still less inventory than it was for 12 years.
Yeah, so
we're still low inventory.
Yeah.
So that and just to kind of put things in perspective of where we are.
Which could you imagine the amount of opportunities we would have for investors if our inventory was doubled? I mean, I just told you I sold 20, got 27 closing. Imagine if it got back to an average level of inventory back in 2000 and whatever, 7 or whatever that your numbers were there. Like from an inventory standpoint, we'd have the opportunities. Like it wouldn't be unreal.
And people don't to get them. And this is a little off, but on as far as the market and why a market update is always going to kind of be like this and not going to be like, oh, the market has crashed and there are opportunities. Because of what happened 15 years ago, people are still around who profited from that and people who didn't quite profit from that. And so there's no way that would happen again because there are too many people that would prevent that from happening who are just waiting for the opportunity. I was one of those guys who was like, I didn't get to buy as many as I wanted to, but I built the system so that the next time that happened, I would not miss that chance. And now, unfortunately, that chance probably not going to come in my lifetime.
Oh, I'm with you.
But that's okay.
Yeah. No, I'm ready. If 8 happens again, we're ready.
We're absolutely ready. But there's so many other people. The industry's ready. So anyway, that's why the market updates is never like, oh my gosh.
I am glad to say that we learned from that. We as a community, as an industry, learned from that.
Yeah.
Rarely do you say that.
Good point.
Human nature is usually to repeat the same thing over and over again.
That's right.
Right.
Yeah.
We learned from that. The banks tightened up and quit loaning deals like that. Like I've said it 100 times, but I mean, we were doing 530 credit scores, stated income, and interest
no
only.
Job,
no nothing. So we've learned from that. You can't do that anymore. But I am telling you that it is a little bit different. Buyers are a little more controlled than what they have been. Will that keep happening? Probably. And I imagine this, this pendulum is going to keep going because if rates, I'm hearing there's close. Some cuts.
It's close.
So now they're talking about having a few cuts.
It's close.
We're going to have an election in November. Depending on the outcome of that, is probably going to influence the rate some. So I imagine that. If you're in a buying mode, you should be ready. You're about to have some opportunities to come up. You're probably going to pay a little bit more and a little bit more and a little bit more the longer you wait.
Yes.
So I will say that this is, I never come on here and say, hey, get in here and call me today. Right. Let's buy today. That's not necessarily how I operate and work. But I will say if you're going to buy in the next 6 months or 12 months or whatever, you might want to get started. I've talked about this. I bought a ton of homes last year, right?
And
the rate on those was higher than I was comfortable paying. But I will say this: if I've gone back and looked in some of these areas, we're looking at 15 and 20% higher on the same type of property.
Market value
that I would have been paying it. So which is, in some cases $15,000. Right.
Yeah.
I know.
And that's what we've said the whole time is that because of this supply and demand and because of the economics and because of the inventory and because of where things are, the prices and again, the industry kind of wins behind it, it's like you're not going to see these prices crater. So they're most likely only going to go up.
Yeah, it would take something. In my opinion, it would take a catastrophe or something awful for us to bottom out. I just don't. They're too strong. They just don't make these mistakes again, and there's too much demand.
Yes, that's what I'm saying.
I mean, like you know me. I'm not a book smart guy, but I do know. I understand economics. I understand supply and demand, and my phone is ringing off the hook. Leads, buyers coming in. You guys know you're calling in, asking questions or whatever. I've had to hire agents. We're building a team.
Yeah,
because the demand is there. So don't tell you I don't want to hear that you can't do it and you're not able to do it, because buyers are doing it. And we're growing. I'm having to expand a team that I never really intentionally intended to expand because I can't get in front of enough people.
Yes. And you and I know that whether you're a listener out there, whether you're in the FIRE movement, that financial independence, retire early, like that thing is huge with folks who are younger than I am. Yes. And my kids' age and above. And like that generation is pushing things, and the ones coming behind are going to push. So it's like this is not going away. So there's opportunity.
The idea that the kids of the youth now are working 40 and 50 hours a week for 40 years and retiring, they're not. No one is interested in that.
Don't sign me up for that.
No,
no. So that's what my kids are saying.
Great. Rent's being paid. Yep. Last thing here, rates are being paid. I've got very few vacancies. I'm running about 5 to 6% vacancy rate on my portfolio. So, as always, tenants are paying. I don't feel like we're seeing the market or the economy force tenants to not pay their rent or to leave us as investors kind of holding the buck. But you say something every time that when times get tough, what do tenants do? They do 4 things.
They do 4 things, which is the first time I went through it was surprising. Second time it was surprising. Now I count on it. And that is when times get tough, that the tenants prioritize. Anybody prioritizes this, but tenants especially, their housing, their transportation, their utilities, and their food. So it's like housing is a big part of that. So they focus on those things. So my collection rate in the 20 plus 2 decades plus I've been doing this is as good as it's ever been. And same with my occupancy. Yeah. Like right now, it is awesome. I credit my property management. Yes. My property management is doing great, but it has been great. I don't know about you, but I essentially like when a house, I've got one that's available for rent. I got a couple in rehab. Yep. But as soon as it's available for rent, it gets rented. And so it's like, it's pretty much essentially occupied and moving. Moving. And it's been great. So
guys, quick market update. Yeah. I'm glad you got to catch my favorite Air Jordan shoe from 1990.
Air Jordan 5.
Air Jordan 5. Any questions that you guys have, comment on social media, email me, Dean@CrestCore.com. Whatever you'd like to do. We enjoy all the funny comments. It's we get a kick out of it. But anything that we can help you with, any questions, Dean@CrestCore.com. We'll see you next week.
Bye.